Ladies and gentlemen, I greet you all. Welcome. This is your boy Pekani here. So, in this video, I'm here to cover the analysis using what? Using the price action strategy. Price action strategy is the strategy that is used mostly by South African traders and traders around the world. So in this case, what I'm going to do is that I'm going to cover the indices. I'm just going to do the NASDAQ, the US30, which is the Wall Street, and also the gold is the XAUUSD. In this video, I'm going to show you the strategy, the simplest strategy that I use in order to determine where the price is more likely to go. So what I'm gonna do is that I'm gonna use rather the trend lines, the vertical trend lines and horizontal trend lines, and also the Fibonacci. These are the three tools that I'm just gonna use in order to just analyze the market and see the entries, the possible entries, and determine my stop losses and my take profits. So in this case, you can see that in this NASDAQ chart, I'm on a monthly time frame. In this monthly time frame, you can see that the market has given us so many levels, key levels that the big banks like to push the market to. So in this case, what I normally do is that I start with the monthly time frame because I want to highlight the key levels that the big banks like to push the market to. As you can see, after this all-time high here, this is the key level. As you can see, after this all-time high here, the market went down aggressively, giving us a correction of this impulse move, because after every impulse, there's going to be what? A correction. So the market was pushed to retest this level. After that, you can see that the market, when it gave us this blue candle, you can see that there is a level here that the market has given to us again. As you can see, we have two candles here retesting this level. As you can see, the body, because these are the shadows, the body, where the body started, that is where the price is. That is where the big banks focus on, because this is where the money is. So you can see that currently we have got the rectangle that is going towards this level that was tested twice again by the two different candles of two different months. So as you can see that now I'm focusing on what? On a recent structure. So now I can just remove this one and say I've got this level 1 and a 2. So you can see that these are the two levels that I have here. So what I normally do is that after highlighting the key levels on my monthly time frame, and then switch to my 4-hourly time frame, so that I can now find the entries that will benefit me. So in this case, now I'm done highlighting what the monthly key levels that the banks focuses on, because you can see this is my support and now this is my resistance. These are my horizontal levels. So what I do now, I switch to 4-hourly time frame. My strategy is so easy. I'll just show you how I use trend lines, and trend lines are vertical trend lines and horizontal key levels in order to determine where the price is more likely to go, and also filter the Fibonacci. So in this case, you can see now I'm on my 4-hourly time frame. So on my 4-hourly time frame, let me just zoom out. You can see that, oh, okay, what the market did is that after it gave us this double top, the market went down aggressively, gave us a correction, and then went down to give us a what? A double bottom. So you can see that we've got a structure here which went down aggressively. So now things are starting to get nice, because you can see that with this structure, we then had a new structure which was bullish, and now we are having a correction. Now that I've highlighted my monthly key level, it was so clear with this one, but now yeah, it's like it doesn't make sense. Why is it here? So what I can do is that I can just remove it now. For now, I can just remove it for now, because I know it in my head that there is a level here. But now my focus is going to be on a trend lines, because you can see that from this high here, the market gave us this structure. And what I do is I highlight the structure here. Most traders like to do this. They'll be like, okay, they just highlight the channel like this. But this one for me doesn't matter that much. For you, if you're just able to see the recent action by the market on a relevant trend line. You get what I'm saying? Because this one, the market is not gonna go below this one. The market is moving forward. So anyways, if I can just remove it, it's fine. I've got this descending trend line here, as you can see. What's important is to highlight the structure. You see what the market did here. The market was pushing down aggressively and retesting this what? Retesting this descending trend line here. As you can see, as the market was doing that, after it gave us this double bottom, what the market did is that it broke and gave us this small correction. After that, the market went up to give us this another double top here. After this double top, the market is now giving us some sort of a correction. So how do I analyze the market so that I can find entries? So in this case, you can see that the market broke this descending trend line. So the market broke. As it broke it, you can see if I use my Fibonacci like this, you will realize that the market reached the what? The market reached the Fibonacci zone. The Fibonacci zone, it is the zone that is made of 50% and 61.8. You should know that once the market reaches 50 to 61.8 of the structure, of the structure, through what? Through correcting that structure. As you can see, this was the descending structure. It has been corrected. And then the market reached 50% and 61.8. That means the market is now more likely to do what? To change their direction. As you can see, it reached the zone and now the market is going down. So if we remove the Fibonacci zone, you can see that the market reached this Fibonacci zone and again the market is now going down. So now because the market has broken our what? Our descending trend line, what are we looking for? Now we are looking for the market to retest before the market continues to go up. So in this case, what I do again is that I take my Fibonacci again, I place it on the structure that has broken my what? My trend line. In this case, this descending trend line, it has broken it and reached the Fibonacci zone. And now again, I put my Fibonacci again, and then the market is going down to do what? To correct the structure which broke the trend line by how many percentage? By how many percent? By 50 to 61.8. So in this case, my Fibonacci zone is where? My Fibonacci zone, we can see that it is just here. As you can see, we highlight it like this. I highlight it here and I go through this these previous tested levels again. There's a reason for that. Why? It's because you can see that the market is going to come in this level, and when the market comes into this level, I'm expecting the market to give me something like this. This is a zone. This is going to be my buy zone, and then you remember that level that we highlighted on our monthly key level. You remember that one. This one, this is a key level. This is where the big banks are going to take the market to. And as you can see here, what do we have here? Now we're going to have this double bottom here. And we're going to have this level here, this level here. Now you can see that it's clear that we have got a head, shoulders in this case. And the head and shoulders pattern, it is the strongest pattern that you can use to determine where the market is more likely to go aggressively. So in this case, we have got our what? We have got our head and here. So the market is going to come here. Once the market reaches this level, we are going for a buy, and our take profit is going to be on this level here. Or you can just say buy. Maybe we'll take profit on the 50% of this structure here. But I am looking for the market to reach this level. So this is how simple it is to use this strategy without doing so many things that are unnecessary. So let me go to the US30 Wall Street to show you how we can also use the price action strategy the way I use it in order to determine the entries. So let us go to our US30 Wall Street. Okay. All right. So you remember what I said? I said to you, we start off by doing what? start off by going to a monthly time frame. And then in this case, in our monthly time frame, the levels that we have here, you can see I've got this key level here, and we have got this all time here. And what we do, I switch to my 4-hourly time frame. Then I zoom out. And I zoom out, you can see that we have got something like this. We've got a structure here. As you can see, we've got a structure here. You see what happened? We've got a structure. The market broke, retested, and now the market is going up. And we've got this monthly key level. You remember? Yeah. So what I do is I can just remove this for now and then use my Fibonacci, because the market is what? The market has broken my descending trend line. So what I do here is that I highlight everything, the whole structure that has broken my trend line. Then after that, what do? I highlight my what? My Fibonacci. And if I go all out throughout the previous levels, you can see that we've got a key level here. This is a key what? This is a key level. So the market is more likely to come to this level. As you can see, if I remove this, the market is now more likely to do what? The market is going to fall. We are expecting the market to come to this level. Once the market reaches this level, then we're going to buy, and we are going for that monthly key level up here. So it's simple like that. This is the simplest thing I use. This is the simplest strategy you can find on price action, nothing else. So if again I switch now to go to my gold, to analyze gold, you will see that if we go to our monthly, time frame, you can see that by just focusing on here, you can see that this monthly key level, which the market has retested, and then the recent one, it is this one here. You see, so what do? You can see that the market has reached my what? My monthly key level. So once the market reaches my monthly key level, that means the market is now going to do what? Going to change the direction. So I'm expecting the market to do what? I'm expecting the market, because it has reached this key level, to give me a correction. After that, the market can then continue to go up. So in this case, what I'll do is, now that I've highlighted my key level, my monthly key level, I switch to 4-hourly time frame. So if I switch to 4-hourly time frame, I can see that, oh, okay, what I'm expecting here is this. Remember, this is my monthly key level. So I can now then put my Fibonacci here. As you can see, if I put my Fibonacci here, what happens is that the market did what? The market reached my Fibonacci 50% and 61.8. Remember what I said about Fibonacci, is that once the market reaches the Fibonacci, the market is more likely to do what? To change direction. As you can see, the market reached Fibonacci, now started going up again. Then it reached 60, started to go up again. So now I can see that I've got that strong bullish movement upwards. So now I can see that I've got a structure here, which I can just use my ascending trend line, vertical trend line here, to highlight this structure. As you can see, the market ascending trend line, once the market broke it, now you had a correction. So for me to get a continuation pattern here, to determine this is going to be a continuation pattern going down, I have to get at least a 50% of the structure in a form of a correction. So I'm expecting the market to do what? Now that the market has broken this ascending trend line, I want the market to correct it by 50% before it can go down. So what happens is that I'm expecting the market to do this, to come to this zone here, as you can see. So as you can see, the market is currently moving towards this zone here. So the market is gonna come here. Once the market comes there, then I'm expecting the market to go down and reach this level here, which is the monthly key level. Or one can simply just do this thing like this and say, this is what this thing is gonna do, like this. Then you take this, you see. So I'm expecting something like this. So I'm expecting something like this. So I'm expecting something like this. So this is what the market is more likely to do in gold. So this is the simplest way of trading indices using price action strategy. So if I can just give you a bonus analysis, maybe if I can just do the, let me see if I've got the euro here, euro USD. I think yes, here it is. Let me just show you the euro USD, what I'm expecting the market to do. As you can see, what I do, I go to a monthly key level, go to a monthly key level. You see here, you see with this only, you see this low here, the market went up to give us this high, then it came down again. So what's important here is to notice that when the market came down here, the market did not reach this monthly key level here. You see, this was the last key monthly key level here. The market did not reach it. Instead, the market went up to do what? To correct or to test this level here, not the last one, but this one again. So now the market is coming down again. So you can see that now the market has tested this one here. As you can see, the market has tested this one here. But because the market has never tested this one, so I'm expecting the market to come down to this level here, because you can even see that if you do something like this, you draw the trend line here, you can see the market has touched 1, 2, and a 3. Then what are we expecting from this? Now that the market has touched like 3 times, you can now switch to your 4-hourly time frame like this. As you can see, the market has touched for the 3rd time here. So what does this mean? If you zoom out like this, and now this is what, this is a 3rd touch with a double, some sort of a double bottom. So you are on a 4-hourly time frame. So remember, I said I'm expecting the market to go down to that last monthly key level. So if we highlight the market like this, then you can see that you can filter Fibonacci here, Fibonacci here, and what you can do is that you can highlight the zone here. This is the zone, so you can see that we are expecting that the market is gonna come to test this level before going down. No, come on. So the market gonna go up, test this level before the market goes down. So this is the simplest way of analyzing the market. The simplest way of analyzing the market. So I'm expecting that this guy is gonna push, come to this level here. So if you can just remove this guy, you can see this is what we are expecting the market to do. And if you remove also this is what the market is more likely to do. As you can see, it's gonna be something like this. It's gonna be something like this. See, this is the simplest way of trading the market. So that is it, ladies and gentlemen. If you wish to communicate with me, you can just go on Facebook and Bekani Bombas Sakile. And Bekani Bombas Sakile. So, ladies and gentlemen, I hope that everything was easy and everything made sense. So I wish you all the best with your trading. So you can just go on Facebook and search Bekani Bombas Sakile, Bekani. That's Bekani, and then Bombas, Bompus. That's Bombas, and Sakile, it's Sakhile. Then you find me on Facebook, then you can drop me the message and just DM me, and then we'll chat more. Or you can just email me on bekani@gmail.com. I'll drop my email below. Thank you.